And welcome back. We're seeing some huge changes in our housing market right now, given the fact that rates or mortgage rates have more than doubled over the past 12 months alone, which is absolutely insane. Also, according to Freddie Mac, rates have never doubled in one single year. And because of all this, we're seeing a giant shift in our housing market right now, which is pretty fun to follow, but some pretty drastic changes in our housing market. So in today's video, I want to share the latest trends we're seeing right now, but also what lies ahead for the remainder of the year and potentially into 2023, given this giant shift in our housing market. So I want to talk about the latest trends according to Realtor.com. They actually just posted today at the time of this video, which is the 27th of October. Their latest housing market update, as you guys can see, I haven't even read it. So instead, here's what I like to do because I'm a real estate market data nerd. Go to realtor.com/research/data and click on this link right here, which more or less takes you to this data right here. So they provide a weekly update regarding home prices, which is the median asking price, active listing count, which of course is housing supply, new listings compared to 1 year ago, the days on the market, in other words, the time period when a home seller lists their home for sale to when they ultimately accept an offer from a home buyer and the house closes escrow later. That's days on the market, and the year-over-year percent change in the number of reduced price listings. So the most recent week we have is for the week ending October 22nd right here. So let's go ahead and dive right in here. I have a lot to share. And by the way, I'll share a summary at the end of this video as well, with also some insights, or not my insights, my forecasts of what lies ahead in the months ahead. So here's the median listing price. In other words, the median asking price of brand new listings. As you can see right here, for the past 5 weeks in a row, the growth rate has been more or less flat at around 13% gain compared to the same time period in 2021. This is obviously much higher compared to historical levels of 3 to 6% gains on a year-over-year basis, and of course not 13%. But this is also one reason why we're seeing this huge increase in the number of price reductions as well. Also, if I had to guess, these year-over-year growth rates is likely to decrease in the months ahead, especially as we approach the holidays. And that's, of course, due to our seasonality of our housing market, but also due to the fact that rates are very close to 20-year highs right now, around 7% for the average 30-year fixed. Okay, let's talk about housing inventory because we're seeing some drastic changes here as well. So right now, housing inventory is up by 36.2% compared to the same time period in 2021. And as we've been important to you guys for several months, from let's see, right here until right there, inventory gains were in the range of 25% to 30%. But more recently, though, have a look at this, because for the past, the past 6 weeks in a row, we've seen an increase in the number of active listings, going from 27% for September 17th. Now it's at 36.2%. So the number of active listings has been increasing for the past 6 weeks in a row. And this increase of housing supply is likely due to a fallout in home buying demand, given the fact that rates are so high right now. That's number one here. Here's number two, though, because this is pretty eye-opening to see that we see an increase of inventory for the past 6 weeks in a row, given the fact that new listings are down greatly. So look at this. For new listings have been declining compared to 1 year ago for 4 consecutive weeks right now. So even though we're seeing fewer new listings hitting the market, active listing count has been increasing for the past 6 weeks in a row. And I'll touch a little bit more regarding that here in just a little bit, but I also want to point out that gains right now at 36.2% is in line with altosresearch.com because they're reporting gains of around 35% on a year-over-year basis. So what they have right now is their 7-day average for the week ending October 21st, which is 1 day before Realtor.com. They're reporting we have approximately 572,000 houses for sale. And 1 year ago, we had approximately 423,000. In other words, that's an increase of 35% on a year-over-year basis. One more thing I want to point out regarding housing inventory is the drastic changes we've been seeing so far this year. So again, for this time period right here, which is more or less the beginning of July through the end of October right now, we've been seeing gains in the range of 25% to now 36%, gains compared to 1 year ago. But look at this. Going back to May 7th, we more or less had the same number of houses for sale compared to the same time period last year. And now we have over 35% gains on a year-over-year basis. Also, look at this, because for the first 3 months of this year, we saw decreases of housing inventory in the range of 20% to 30%. So fewer active listings compared to 2021 for the first 3 months of this year. Because look at this, January 1st down by 29.6% compared to January 1st of 2021. Now we're up by 36.2%. And again, this increase of housing supply is really due to a pullback in home buying demand as houses are taking longer to sell, and we're seeing fewer contracts being signed between buyers and home sellers. Now, here's what I mean by that, because for 16 consecutive weeks, we've seen fewer new listings hitting the market compared to the same time period in 2021, as you can see right here. New listings down on a year-over-year basis for 16 consecutive weeks. Also, as I stated here, we've had 4 consecutive weeks where we saw double-digit decreases from 2021. So it's pretty eye-opening to me to see double-digit decreases of new listings. And despite that, we're seeing active listings or housing supply increase for 6 consecutive weeks now. Also, this decrease in the number of new listings is also what Redfin is reporting as well. Look at this. They actually report averages over the past 4 weeks, whereas Realtor.com reports averages on a week-over-week basis compared to 1 year ago. Anyways, Redfin's reporting a decrease for the 4 weeks ending October 23rd, down by 21% compared to the same time period in 2021. So 74,000 houses that got listed for sale during this time frame. But back in 2021, this time, we had approximately 94,000. Also back in 2019, we had approximately 85,000 houses that got listed for sale. And in my personal opinion, the reason why we're seeing a decrease of new listings is because a lot of people don't want to give up their historically low rate. A lot of people have rates of less than 4%. A lot of people have rates of less than 3%. So it doesn't give people a lot of motivation to sell their houses, given the fact that rates are closer to 7% right now, and they don't want to give up their 3% rate. So we're seeing that, but also more home sellers or more homeowners are more pessimistic regarding our housing market, given the fact that it has been slowing down lately. In other words, not a lot of motivation for current homeowners to get their houses listed for sale right now. Let's talk about days on the market though. Look at this. For the past 13 weeks in a row, days on the market has been increasing compared to 1 year ago. In other words, houses selling longer compared to 1 year ago for the past 13 weeks in a row. Again, though, this is a lagging indicator what our housing market was like approximately 1 to 2 months ago when the offer was accepted by the home seller. So these are based on closed escrows. So as of right now, houses are taking approximately 7 days longer to sell a house compared to the same time period 1 year ago. So houses have been taking longer to sell for quite some time now, but we're also seeing a huge increase in the number of reduced price listings sell. So the number of price drops for people listing their houses right now. Look at this. For the past 3 weeks in a row, we've been seeing huge gains in the number of active listings with price reductions. So much so right now is that we have approximately 98.6% more price reductions right now compared to 1 year ago, which is pretty insane because right now at 98.6%, this is more or less on par with the year-to-date highs we saw in mid-June of this year, in the range of 96 to 110% increases. Also have a look at this because this change has been changing greatly this year. Again, the increase right now is 98.6% in the number of reduced price listings. But look at this. To start the year, which is more or less what the first 3 months of this year, we've had fewer price drops compared to 1 year ago. And in fact, for the first 6 weeks of this year, we saw around a 30% decrease in the number of reduced price listings compared to 2021. But overall, we saw fewer price drops for the first 3 months of this year compared to 2021, which is obviously vastly different compared to more or less the second half of this year. We're also seeing a huge increase in the share of reduced price listings. So according to Altos, the share right now is 43%. Compare that to the middle of May, the share was approximately 21%. In other words, over the past 5 months, the share of reduced price listings has doubled. Also, have a look at this on their website. Right now, the share is 42.53%. 1 year ago, the share was approximately 28%. Back in 2020, the share was 26%. And pre-COVID, back in 2019, the share was just less than 37%. So the share right now at 42.53% is at least a 3-year high. All right, that was a ton of info to share in today's video. If you guys are still watching this video, I appreciate you. But I also want to share a summary as well as my predictions in the months ahead, given the fact that rates have been increasing so much. So here's a summary. Number one, inventory has been rising for the past 6 weeks in a row and rose by 36% last week compared to last year. And this growth rate here is very significant given the fact that we've seen fewer new listings compared to the same time period in 2021 for 16 consecutive weeks. But on top of that, for the past 4 weeks in a row, we've been seeing double-digit decreases in the number of new listings. So for the past 16 weeks in a row, we've been seeing fewer new listings hitting the market. If our market was doing just the opposite though, let's just say that we've seen more new listings hitting the market for 16 consecutive weeks, our housing market would be in big trouble. But we're not seeing that just yet though, because we've been seeing fewer new listings hitting the market for the past 16 weeks. So that's number one. Let's have a look at number two here. Mortgage rates have been at or above 6.6% every day in October, which is pretty insane. This would likely slow down housing demand further in the weeks and months ahead here, and also cause inventory to rise further as well. Also, rates right now are averaging around 7% right now, according to the Mortgage News Daily. Of course, that's the average across the United States with people with exceptional credit though. But at 7%, this is very close to a 20-year high. The year-to-date high this year was set last week when the average rate or the average 30-year fix was 7.37%. Now it's around 7%. But still at 7%, this is very high, around a 200 basis point increase from August 1st of this year, and also a 386 basis point or 3.86 percentage points from 12 months ago. And also, as I mentioned, rates have more than doubled over the past 12 months, which is absolutely insane. And also, according to Fannie Mae, mortgage rates have never doubled in a year before, dating back to their data, which goes back to 1971. That's number two. Let's have a look at number three. We saw a huge increase in the number of reduced price listings last week, again up by 99%. The share of price drops has more than doubled in the past 5 months as well, according to altosresearch.com, and is also far higher compared to the past few years. This is likely to increase given that rates have surged as well. And also number four, houses are taking longer to sell compared to the same time period in 2021 for 13 consecutive weeks. Again, this is a lagging indicator of our housing market here. And just like price reductions, I expect this to increase in the months ahead due to our seasonality of our housing market, but also due to a spike in rates. And also because rates have been at or above 6% since September 1st of this year, this is likely to cause some huge changes happening in our housing market in the weeks and months ahead. Let's talk a little bit about that. So number one, we're likely to see more home buyers getting priced out of our housing market, given the fact that rates have increased so much over the past couple of months now. That's number one, but also probably seeing a lot of home buyers who are just waiting out our housing market, given the volatility in our market right now. And also I mentioned here the 1% rise in rates rule. For every 1% increase in rates, that causes a 10% decrease in buyers' purchasing power. And because rates have increased approximately 4 percentage points over the past 12 months, that causes a 40% decrease in buyers' purchasing power. And the likely effects of this is that some home buyers are getting priced out, whereas others are just giving up. And number two, we have a huge housing affordability issue in the US right now. So for someone looking to buy an average price home today versus 1 year ago, it's going to cost that home buyer an extra $900 more per month on average to buy an average price home today versus 1 year ago. And by the way, that's around a 70% increase from a year ago. And number three, I wouldn't be surprised to see huge decreases in the number of home sales for the remainder of the year. That would be for October through December, of course. This also could be very significant though, given the fact that we've been seeing this rapid rise in rates. And of course, I'll definitely keep you posted with the latest developments. And this is really pure speculation, right? Number four, to combat inflation, the Fed is set to raise the federal funds rate in about a week, which is in November, and also in December, which could cause mortgage rates to potentially increase even more. And number 5, we won't see the true effects regarding rates at or above 7% until we see November and December's stats. And number 6, subscribing is for free. These videos take me hours to make, so hope you guys get a lot of value in these videos. And of course, if you haven't subscribed just yet, I invite you to do so. And also hit the like button if you got any value in this video whatsoever. Hope you guys have an awesome day and look forward to seeing you on the next video.